Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking back at gold and the dollar, and you wonderful people all win the thumbs up and likes and shares award. I appreciate that. Lots of them yesterday. Certainly very helpful. So looking at the dollar, the daily chart is a bullish reversal candlestick. It's a hammer with a long lower wick showing bulls buying the dip. If we get a green day tomorrow, this bullish reversal candlestick will be confirmed. The low we had previously was down at 101.30, and although we broke well below that level, the day closed above it, so that support is still holding. So we need to be watching this 10-day moving average resistance. It has rejected the last two bounce attempts, and we're pretty much having a tightening range between 101.30 support, this 10-day moving average, dropping resistance, which is currently at 102.11. Tomorrow that will be lower. So looking at the hourly time frame, we can see that bounce underway. At this point, it's nothing more than an oversold bounce. But if we form a higher low and then a higher high, we will know it will be more than that. I'm looking at resistance here, the high of this oversold bounce attempt. That was up at 101.90. If we break above 101.90, we know the bulls are serious, and we will likely see that daily candlestick confirmed for some bullish momentum into next week. So looking at gold, I do believe that we are seeing the top of this bounce. Now the hourly chart still looks fine. This is a bit of an early call on my part because the hourly chart looks great. Higher lows, higher highs. We're consolidating after a big time bull breakout this morning, which is still fine, normal, and healthy. But what I'm seeing is a bearish reversal inverted hammer on the daily time frame, and it's lining up with that psychological 1200 resistance. So that was our target. Our initial targets were 1160, 1180. And then once those broke, it was a stronger move than we thought, or than I thought it would be. I thought we would have to consolidate. We didn't see much consolidation on the way up. We hit 1200. This is a very clear bearish reversal inverted hammer. If we see a red day tomorrow, it will be confirmed. And that combination of the reversal candlestick combined with a clear 1200 psychological resistance level has me thinking we're now going to backtest this 10-day moving average support. It's currently at 1177 by tomorrow. Actually, it looks like tomorrow just turned. So it's at 1177, and over the next couple of days, it'll make its way into the low 1180s. We know 1180 was resistance. We're now looking for 1180 to act as support with the 10-day moving average support helping it out. But I do believe that our temporary top is in. The weekly time frame needs to consolidate, in my opinion, in order to try and reverse this trend. At this point, it is still very clearly a lower high pattern, and this is just an oversold bounce at this point. What I would want to see as a bull, a longer-term bull, would be consolidation, even if it's coming with a red week or two, and then a higher low established, and then a higher high. If we get that higher low and higher high, then we start looking on a trend change, and we start looking to head back to 1300. And obviously, there's a lot of resistances in the way before that, but just because we've gone from our low, just 3 straight bull weeks without seeing 2 red days in a row, consolidation is needed for proof that this is a strong move. And we'll be looking for a bullish MACD cross on the weekly, but as of right now, daily chart is telling me that our temporary top is in. And while I might not be confident enough to go bearish, personally I would be, but if I were not, I would certainly just be looking to be protective of profits on the way up. Our initial bullish signal was the 10-day moving average becoming support for the first time after many rejections, and it certainly played out very nicely. Now we're looking for that level to be tested again as support. We have not back tested that level since it became support. So let's look at some of these miners. I had a request for JNUG. So JNUG had a gap up open and the bears controlled the day. We closed down fairly close to the low. So it's very clear that we're seeing resistance up around $9 psychological. Bulls can't close over that level to save their life the past 6 trading days. But we're still seeing these higher lows. If we were to see a break of 754, that's a red flag for the bulls. That would be a break of this higher low pattern. And let's look at NUGT while we're on it. That level for NUGT, it would be a bear break, would be down here at 863. So we are seeing a little bit of weakness in these miners. And again, it's occurring. Actually, it's not for these names because of the time decay factor, but that's a bearish reversal doji on JNUG weekly chart. 1 trading day left to go. NUGT, inside candlestick on the weekly. It's even weaker than JNUG. Let's look at the non-leveraged here. GDX rejecting from its middle Bollinger Band weekly resistance, 2303. GDXJ right at that middle Bollinger Band, but it would still be a bearish reversal doji if we closed right here, a little spinning top. So again, need to make your own decisions here. I'm not telling you whether to buy or sell, but this is just my opinion. I gave my opinion when the 10-day moving average became support. I was pretty opinionated in that video. If you go back to December 27th, rewatch that video. That's why I leave all these videos up on YouTube. We've got hundreds of gold videos now at this point. But I do feel that 1200 is our temporary top, and really we broke out above that. The top itself was 1206.83, but I think we're going to see some more consolidation than we have seen yet on this move to the upside. And on the hourly time frame, we could still see a little bit of a bounce and a back test of 1200 resistance again. You can see 1200 psychological held, then it broke. So if the bulls attempt to form a higher low and then make another move to 1200, and if you're looking for a bearish entry, that could be a bearish entry point. Then you would exit if the high we have seen, 1206.93, broke for the bulls. So that's what I'm personally going to be looking for if we do get a little bit of upside overnight or in the morning. But like I said, that is a daunting daily bearish reversal candlestick with the dollar bullish reversal candlestick as well. So not seeing all these signs on the hourly just yet because we are still in uptrend for gold and downtrend for the dollar. A bit earlier call than I usually make, but that is my opinion, and we're going to see how it plays out from here. So let's go through hypothetical situation. What would be the ideal scenario for a bull? In my opinion, it would be a consolidation move back down to 1180, and if 1180 were to hold and then we head back up and break 1206.83, that would give a lot of confidence in this longer term trend. Now that wouldn't be a ton of consolidation. That's only $14 to the downside from here. Really on the weekly time frame, the bulls want to see a nice solid level with a nice lower wick bouncing off support. So it could be 1180, it could be 1160, it could be that 10-day moving average. Either way, we need a higher low and higher high on this weekly time frame to try and reverse this trend. So those are all my thoughts. We'll check back in over the weekend, and I will certainly continue coverage of gold as always. So I will see you then. Thanks for watching.